Hi, thanks so much for tuning in. This is ET Now Spotlight and I'm Alex Matthew. India's bull market has been much more than just a phenomenal wealth creator. It has also provided game-changing opportunities to several businesses and individuals. And that's what we're shining the spotlight on this week. Let's start, like we always do, with the context.
The bulls have been on a rampage on Dalal Street for over a year.
17,000 is here for us, historic day for us.
In fact, their charge began with the humongous crash in equity markets, the very definition of a black swan event. On the 23rd of March last year, less than a month after India reported its first case of COVID-19 and a day before Prime Minister Narendra Modi announced a nationwide lockdown, the benchmark Nifty 50 index plummeted by the most on record in a single day. It hit a low of 7,511. A year later, the benchmark had recovered all of its losses and gained some. And by the start of September this year, it had reached 17,000, marking gains of over 125% from the low point. But a few characteristics of this bull run stand out. It isn't just that every minor fall since the crash of March 2020 has been aggressively bought into. According to volume data released by the National Stock Exchange, in the financial year ending March 2021, the share of individuals in the total turnover on the exchange has risen to 45% from 39%. In other words, on any given day, individuals, and that includes both retail and high net worth investors, account for nearly half of the traded volume. But that isn't all. The number of new entrants to the equity market has grown by a staggering amount. Just on the National Stock Exchange between April and July last year, there were 20 lakh new investor registrations. And in the first 4 months of this year, there were as many as 51.3 lakh registrations. And what's more, over half of the latest additions are registered from states beyond the top 5. A few businesses and individuals have benefited tremendously from the soaring retail investor interest in the capital markets. Perhaps the biggest beneficiaries are the discount brokers. The availability of more time and ease of access through purely digital means has allowed many more individuals to reach Dalal Street. Indeed, the number of Demat accounts added since the start of the pandemic has been eye-opening. The total number rose 34% over the course of last financial year, and by the end of June this year, grew a further 14.5% to 6.3 crore. Companies like Zerodha, Groww and Upstocks have emerged as clear winners, but traditional brokers are also transitioning to a more digital approach to onboarding and servicing clients. And it appears that the model will shift further, with Zerodha working towards setting up its own asset management company. Another major outcome of the rising retail interest has been the activity in the IPO market. On an average, over 15.5 lakh retail investors participated in every IPO launched in the current financial year. That compares with 12.7 lakh in the last financial year and 6.9 lakh in FY20. Mutual funds and their distributors have benefited too. Most recently, in July, the mutual fund industry saw a sharp rise in SIP accounts to 4.17 crore. The SIP contribution on a monthly basis stood at 9,609 crore rupees. Net retail inflows into mutual funds overall during the month was over 40,000 crore rupees, which took the retail assets under management to 16.25 lakh crore. And finally, the changing demographic of investors in India has resulted in the creation of a new breed of social media influencer. These individuals are leveraging platforms like YouTube and Instagram to reach millions of young investors, usually with advice that helps them cut their teeth in the capital markets. Some worry that a correction in the stock market will cause a number of the newest investors to shy away. But others like Big Bull Rakesh Jhunjhunwala believe that the best is yet to come.
Now that the reforms are coming through, I think it's the time that we will reach the threshold of a breaking point, of an inflection point. The decade doesn't belong to us, the century belongs to it. It's going to be an Indian century.
For the retail investor, it's a brave new world with the promise of wealth and prosperity. And that will likely change the landscape of financial services even further. In Mumbai for ET Now, this is Alex Matthew.
Clearly, our lives have changed for good on account of the pandemic. For example, you're more likely to use UPI or another form of digital transaction than using cash. And it's quite likely that you transact in the stock market using your phone. Now, among the biggest winners of the shift in landscape that is taking place in financial services are discount brokers, and my next guest has had a front row view of the phenomenal surge in retail participation that has been evident over the last several months. Harsh Jain, Chief Operating Officer and co-founder of Groww, thank you so much for taking the time. I want to start by asking about the numbers. They're visible for all to see, but I want to understand what the demographic is like. If you can splice your customer base for us and give us a sense of the age, the type of investor that has come on board for you.
Yeah, sure, Alex. First of all, thank you so much for having these questions with me. So the demographic has been shifting over time, and in the last 1.5-2 years, it has shifted a lot towards the traditional or the middle-aged people to the millennials and the younger folks. So we see almost 60 to 65% of our users are below 35. So between 18 and 35, if I have to break it down, so 18 to 25 will be probably 2/3 of them, and the 1/3 will be even older than them. And these people are coming from across the country. Probably 65% again will be a split from the non-metros. So it's a very, very widespread demand that is coming in, and we are seeing.
Is there any sense that you get, or is there any trend that you see in terms of the ticket size of purchases that these people make? Have you drawn any insights from that?
So ticket size has been varying over time. What we have observed, the ticket size difference is not there by the age. We've tried to see if the general hypothesis are the younger people investing less. So that's not the case, but what we have seen is the growth. So we track first transaction and then the 12th month transaction, like if people are doing SIPs or people are investing in stocks, how much they are investing in the first month versus how much they end up investing in 12 months. And then increase is substantially high, like almost 3 times higher than the people who are, say, above 35 or who have seasoned or who are existing investors. So Alex, one more point I want to make is one more split we see is the first time investors versus an existing investor. Because people who come and we do the KYC, those are the first time investors. They've never invested in their life before. So close to 55% of the people who come in, they are investing for the first time. So they're new to the industry, so to say.
It's been a phenomenal story, Harsh, for you as well as some of your peers. But there are contentions, and there are some of the old hands in the market that point out that bull markets have come and gone in the past, and this particular rally is fueled to a great extent by a lot of new investors that are excited with the kind of returns that they've got in a very short period of time. So the worry is that if there is a substantial correction, a lot of these people will head to the exits. Do you think that that's true, or do you think that we've seen a change that is for good?
So Alex, the real reason what I believe and why there's so much participation happening is because now investing is truly democratic. Now you don't need to be an HNI, or you don't need to have access to the offline advisors or brokers, or you don't need to really be a finance student to be able to understand, learn, and make a decision. So in all senses, investing has become very democratic, and this is just the beginning. It happens to be in the bull market. Of course, there is a positivity. You will, if you start doing it, your parents or your family will not stop you with the negative notions or any myths, because obviously there's a positivity around it. And the broad story about India is very clear to people. Like, they see that India is growing. It's one of the countries probably going to outperform everyone else in the next 15-20 years. So that level of positivity, along with the democratization, which is why democratization I mean is access to everyone. Now within a mobile app, now Groww app is being used in more than 700 cities in the country. So those people sitting in those cities are now having access to the best customer service, best product, best experience, all the data information, and they can transact through UPI or any payment mode, sitting in their comfort of their home. So they don't need to really do anything beyond that. They just need to look up, read, understand, and then pick the funds or the stocks they want to buy. So that's one part of it. The other part of it is the content. Like the information is simplified so much. If you look at our own initiatives, right, we've been spending a lot of time and effort to make educative initiatives, right from our YouTube channel to our Ab India Karega Invest kind of campaigns, where we used to go to every city. Now we do it digitally. But the idea is that, again, it's very simplified version of the information, the content, which is helping these young people educate themselves, onboard themselves on the platform and make the decision. So all these theses, I don't see market has a very significant role, in a way that if the market goes down or anything changes, will these people leave investing? I don't think so.
Absolutely. And in fact, that is one aspect that I will be talking about a little bit more at a later point in this program. It's been a pleasure speaking with you, Harsh. And I think you've made excellent points on the kind of insights that you've drawn from the customer base that you've amassed in such a short period of time. Thank you so much once again for taking the time.
Thanks, Alex.
Now, the boom in equity markets, particularly what we've witnessed over the last several months, naturally feeds into a lot of demand in the mutual fund space. My next guest has a deep understanding of that business. It gives me great pleasure to introduce Neeraj Choksi, Managing Partner of NJ Group. Mr. Choksi, thank you so much for joining in and taking the time. You began your journey with NJ as a first-time entrepreneur, first generation entrepreneur back in 1994, and you've seen a lot of these cycles. My first question to you is this cycle that we've seen, is this bull run different from everything that you've seen in the past?
Thank you, Alex. Thanks for those kind words. See, I think cycles have been a part of the market, and if you look at the history of developed market, US market has a history of more than 200 years. And even in India, we have a huge history now. I think that there are bull runs and bear runs. The reasons could be different for every bull run or bear run, but that is a normal phenomena in which, because normally what happens in the market, it moves on emotions more in the shorter term, where because of greed and fear, people make investment decisions, and at times people become so greedy that they forget everything and they start buying at any unreasonable prices, and that's what has happened in the past also. And then the correction takes place, and again the market moves. That's how it happens. Sometimes the magnitude is larger, sometimes it is smaller, but it is not different because the human behavior doesn't change, I think. And I don't see any difference. One has to, however, look at the market from a valuation perspective, how expensive is the market, and accordingly take investment decisions.
You've summed it up brilliantly. In fact, you've echoed the words of quite a few of the market experts that come out of this channel. But I want to understand from the perspective of your business, Mr. Choksi, in terms of the kind of people that are coming to you. Are you seeing a lot more retail interest over the last 16 months? We've seen the kind of boom in the number of demat accounts that have been created. Are you seeing a similar increase in business as well in terms of assets under management?
Yes, I think we have always been promoting retail investment for last several years, and SIP is one of the simplest investments of all, which we have been promoting for a very, very long time now, maybe more than 20 years. And of course, because of globalization, because of digitalization, not globalization, but because of digitalization, and now the account opening process has become smoother. Access to information is there because of social media. And the new generation is very fast and they want things instantly. And yes, we have seen the young generation people entering into the markets. They want to taste the flavor. That's where we have seen some of these accounts going forward, increasing. As far as our business is concerned, we still focus more on our distributors network. We have an intermediary who is in between, who is helping the investor to take right decisions. So that's how, but definitely there has been an increase in retail interest. People have been talking, and everything has, a lot of things has happened, like social media. Because of COVID, people got a lot of time to, look at other things. Again, the interest rates, if you see, the interest rates has fallen down significantly, which used to remain at 8%, 9%, has gone down to 4-5% the banks are giving. So there has been an interest. The real estate also is not has not been a promising investment avenue in the recent times. So there are several reasons for that. But yes, definitely the retail interest has gone up significantly in the last 18 months.
Okay, so you already mentioned that we're moving very quickly towards digitization. I take that point. But I want to understand in terms of the demographic of the clients that your group has. Is there a big shift in terms of the smaller towns also being added, in terms of very young people coming into the fold? Because traditionally, between that 21 to 27 or 28 age group, people have not been very active in the equity market.
Yeah, I think that's a very fair point. People are generally procrastinators in terms of savings. But the young generation are coming for probably they are trying cryptocurrencies, they are trying to directly invest in stocks, and they want quick money. So that is the kind of certain behavior which is being observed at this point of time. I think, again, because of access of information, a lot of these young crowd, they are having social media access. And when you get information, when things like Zomato and other things happens, the new age equity, the different mindset, sometimes it is very difficult for people like us to understand that a cash burning business, how can it get a valuation? So, but that's what is happening, and it is attracting interest of the the young crowd, and that's what we have been witnessing. But I think there is a room and opportunity to advise those young people, and what is the right way of investing. I think it's not about the flavor of the day, but it's a very, very serious thing where you are saving for long term for various needs of your life.
Mr. Choksi, thank you so much for taking the time. In fact, I think you've hit the nail on the head and you've described it perfectly. Let's hope that this is something that builds over a period of time, and it's a systematic shift in the way that people invest, and not something that is a short-term trend. Thank you so much once again for taking the time.
Thank you so much. Thank you, Alex. Thanks to the channel. Thank you so much.
The new younger investor is looking for information in a way that they can understand it. And that's where the new age social media influencer comes in. My next guest is an Instagram star, Sharan Hegde. He's currently employed with PwC, and what he's doing on the content side is happening simultaneously. Sharan, thanks so much for joining in. You've had phenomenal success over just a very short period of time. Did you anticipate this? And what were you thinking when you started?
Well, to be honest, definitely not. Growing from 0 to 400,000 in a matter of 8 months is definitely not something that I anticipated. But now that has happened, I'm very overwhelmed and kind of blessed to have been given this platform where I can democratize investing knowledge to millions of people on a daily basis. So yeah, really, really blessed and thankful to what I've achieved.
It's very interesting that you put it that way, democratize knowledge. And that's really the key to, I think, what a lot of people are now experiencing. They want things given to them in a format that they understand. And you're doing exactly that. There is, however, a challenge in terms of the format that you've chosen. You've chosen a very short format, and there is only so much that you can fit into that. Are you looking to broaden it to do long format stuff?
Right. So absolutely. So when I started off creating content, I actually started on YouTube because finance, as we all know, takes a significant amount of time to explain. It is not something, I can't just take a complicated topic and give a textbook definition in 30 seconds and expect people to understand or even have the interest to listen to it. So that's why I chose YouTube in the beginning. But what happened is YouTube at the end of the day is like a search engine. It is a search engine. So it can reach people only if they want to know about it. And the problem is people don't know what they don't know. And when you don't know what you don't know, the content is never going to reach you. So that's why I pivoted to Instagram, so that it can reach to people even though they did not ask for it. So that way I can reach out to as many number of people as possible and ensure that people get to know the things, and people realize that, okay, something like this also exists. And this is something that is important and that can be implemented in my life. Now, as you rightly pointed out, Instagram is a short form content. So, and you're not just creating, and you're not just among content creators who are creating finance, you're also amongst comedians, actors, singers, dancers. So each content that you create is getting ranked across all different length and breadth of content that is out there. So in order to make your content engaging, you can't just talk about finance the traditional way and just say a textbook definition. You need to make it interesting and engaging for a large number of audience. So I think what I have figured out is comedy and acting. I have merged comedy and acting with finance. And by doing that, I have been able to be very, very successful because people really relate to that. And by making it like a skit where I'm acting two different characters, it really connects with the audience on a very personal level. And they can actually get a very practical overview of what exactly I'm trying to say. And it doesn't matter how complicated the finance topic is. I've figured out a way to make it as simple as possible through, by creating these engaging skits. And it's not just skits, right? I also combine it with other pop culture references such as Harry Potter, the Avengers, Batman. So all these are very, very relatable characters to a large number of people. So when you combine finance with something like that, it's never been done before, by the way. That makes it very engaging, and people tend to watch it, even though they're not interested in finance per se. But when it is merged and made into something of that sort, it appeals to a large number of people. So I think that has worked really well for me.
Absolutely, and you seem to have cracked the code. My last question to you is, how do you monetize this? You've garnered quite a lot of attention, quite a lot of following. I think a lot of people want to know, how does a social media influencer that is involved in educating people about finance monetize their content?
Right. Absolutely. So the monetization comes in two forms. One is something that is coming through external monetization. And by that, I mean collaborations with brands. So for example, I create content on finance. So I attract the finance and the fintech brands. So what they would do is they would approach to me and ask to sell a particular product of theirs. So now, me personally, what I do is I get approached by about 100 brands in a month. And I work with only 4 of them. So I have a brand manager who screens through all the emails and tells me what are the most relevant brands. And then I do my own personal research on these brands. It's not that I would work with any of these brands, because finance, as you know, is a very sensitive thing. And it wouldn't be right on my part to promote any new finance brand without doing my background research, because it is at the end of the day reaching to millions of people, and the way they invest their money is also my responsibility. So I do a very strong due diligence on what kind of finance brands I want to work with, and if there's something that I personally use, then it's a big win, because I personally use that brand. Then I have no problem recommending that to other people. But at the same time, if it's something that I don't use, then I use a very strict policy that only if I'm interested in a brand like this, and if I find a genuine use case of that brand, only then I would work with them. So that is number one, working with brands so that you do integration with their product on your platform, and they compensate you for that. And the second way which people do is doing through self-initiatives. What I mean by that is by creating an educational course. So for example, in my case, I could create a finance-oriented course. I could create a workshop on personal finance to help people manage finances by themselves. So this is something which is initiated by the creator himself, and he would charge a nominal fee for taking this course. It could be through a recorded format, or it could also be through a live session format. So these are the 2 main sources of income which a content creator can monetize upon.
All right, Sharan, we'll leave it at that. I can't wait to watch your next reel. Now, on that note, it's a wrap on this edition of ET Now Spotlight. It certainly is a brave new world for the Indian investor, but we're here to walk beside you. This is ET Now.